Well, hello, 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 and welcome to another episode of Ladies Listen Up. What is your relationship with your money? Before we get started, don't forget to like, share, and subscribe. Share this information with somebody else. One of your sister girls out there that's, bad manager with her money. Well, we won't say bad, we'll just keep it to ourselves. But they need a little bit of help with handling her money or managing money or, what have you. So this is Ladies Listen Up. What's your relationship with your money? So today we have an amazing, amazing, amazing topic for us. Won't fit into grandma's cookie jar today though, because we're going to talk about the bank. And this is something that we really, really need to understand. Knowledge is power. So, we talk a lot about our, diversification and what it takes to create a portfolio that is diversified, right? Because we don't want to put all of our eggs in one basket and then have the basket pulled out from under us, right? So let me go ahead and I'm going to share my screen. You all know technology is not, I'm not the best at technology, but you know what? It doesn't take for us to be perfect. It just takes for us to get started and do something. Oh yeah, I wanted to share with you all something. You see, fall is coming in, and so we're in our autumn breeze season, with the apple cider and the, some people, like the different seasons. Like I for one, I think I'm getting to like the different seasons because things change and it doesn't have to all just stay, the same. We're here in Michigan, so we have, the colder weather that's coming in. I hear that in a couple of days we might be getting some snow. Mm. No, I don't know about that, but we can take the good and get rid of the fat, right? So when we talk about this bank thing, there's a lot of information that we really, really, really need to know. So I'm going to share my screen, and then we're going to get some amazing all about our money.
It would seem that a bank is a good place to keep your money. Hardly anyone would think of the secrets lurking behind the walls of this financial institution. Except that billionaire Henry Ford claimed, "It's a good thing a lot of people don't know how the banking system works because that would lead to a revolution." The level of financial education is still not that high, and this is one of the reasons for the great wealth disparity in the world. You cannot get rich unless you know how to handle money. Today, I'll share with you the banking secrets that only rich people know. How do banks make money on you? And what is best to do with the money so it doesn't fall into the pockets of greedy bankers? You can find out right now. Welcome to the main channel on finance. Subscribe right now if you dream of getting rich. As far back as the 7th century BC, the prosperous city of Babylon had its first bankers who lent money at interest. It was then that the first banknotes appeared, and they were the same value as gold. The word bank has Italian roots and comes from banco, which means table. Originally, banks dealt with exchanging large money into small, exchanging coins, and other operations with cash. But with development of economies of the different countries, initial offices essentially extended the list of the services provided. The first private official bank in the world is considered to be a cartel of private usurers from Genoa, united in the partnership of St. George in the 12th century. The bank is given the first large credit to authorities of Genoa Republic for the war in 1148, and those, in turn, on account of write-off of the saved-up debts, authorized partnership to collect some taxes from citizens. Until 1407, the internal policy of the organization was formed, after which the Bank of St. George was officially formed. Back then, people started to have a dual attitude to the banking system. On the one hand, it was a solid and conventional financial tool. But on the other hand, everyone considered bankers as greedy or cunning swindlers. Moreover, moneylenders were deprived of communion and normal Christian burial. It's hard to say that in modern times, in people's minds, the attitude towards bankers has changed dramatically. This situation is quite justified because the banking system and the principles of its operation still cause distrust. There's no doubt that even your bank has secrets, and now I will tell you more about them. Banks don't store money. Deposits are often advertised as one of the most reliable tools for passive income. The only problem is that in many countries this option of income simply doesn't work. After all, the interest rate of the deposit will never cover the inflation rate. For example, according to statistics for 2020, the top banks in Switzerland offer a deposit interest rate of no more than 0.5 to 1.5%, while the average inflation rate is 1.5 to 2%. We can conclude that your income will be completely eaten up by inflation. Banks often intentionally lower interest rates because they don't benefit from your wealth. However, it is profitable for them to keep this money because by allowing people to open deposits at a smaller interest rate, they give this money to other clients in the form of loans with a slightly higher interest rate, making money on the difference between the two interest rates. Besides, the authorities are also interested in such manipulations with your money. The banks make their money circulate. This means that not only the owner has access to the deposit, the government now also has some level of control over the citizens' money, which is why the super rich are looking for ways to protect their wealth. The biggest customers of banks are the banks. Banks exist to serve themselves. Serving other customers is secondary. All money deposited into a bank becomes its asset. All money borrowed from the bank remains its asset. The bank is in an almost win-win position. Therefore, it always acts in its own interest. Banks will never fight for the person who keeps the money in them. They fight for more interest and control. The fact is that once you're in the bank, your money is no longer just your property. It also becomes an asset of the bank. A bank's credit limit always depends on how many deposits it holds, and the ratio is always unfair. Banks don't give money to people who look poor. Bankers are the most impeccably dressed professionals in the world, and they, consciously or unconsciously, judge the appearance of those around them. If a customer doesn't look good, the bank won't want to give them a loan. If the borrower looks like they need the money, they probably won't get it. If they look like they don't need it at all, they will probably get what they want. The only exception to this rule is having a bank account. In that case, the staff can find out for sure if the person is really rich. But if there is no account, they will assess customers by their appearance and draw conclusions based on it fairly quickly. Bankers get an annual bonus for loans issued. Of course, the bonus does not go to all employees, but only to those who are responsible for issuing loans. As a rule, they are managers, and this is not a bad thing. The bonus depends on the loans granted. Of course, they should not be unreliable. Everyone at the bank wants an extra payout at the end of the year, which is why they may be more willing to approve applications closer to that time. More often than not, this happens unknowingly. At the beginning of the year, the manager feels no pressure to approve loans, but toward the end of the year, there is a fear of losing the bonus by not approving enough applications. In addition, no one wants to be labeled as incompetent. Thus, if the customer doesn't get the money, the bank employee will miss out on the yearly bonus. This is how rich people use it. They come to the bank to get the maximum possible amount because they have the necessary collateral and credibility. Banks make money on you and your name. Banks have a very valuable resource, a database of clients, and they successfully convert this one into new offers, increasing their profits. In addition, it's not uncommon for banks to secretly sell their customer bases to other financial institutions. For example, to offices that engage in microcredit, or even to scammers. It all depends on how conscientious employees of the bank are. We should also mention the commission fees charged on your credit cards. Here are two ways to cash in on you. Offer you a card with a particular status, for which you have to pay a fee. Or they can charge you a so-called shadow tax. You are simply charged for using your credit card. This is done completely unnoticed by you. After all, when you buy goods by credit card, the tax should be imposed on the seller. The seller, in turn, inflates the price of the goods, and as a result, you are essentially paying the shadow tax. Better terms for the rich. Banks are businesses just like any other business. They have shareholders to whom they are accountable. If the business model isn't profitable, they won't survive. That's why they are much more comfortable lending money to a rich person than to a poor person. This is because if the rich person can't pay back the loan, they could sell part of their business to pay it back. Also, banks do this to make sure they can get a loan from a rich person in case the bank goes bankrupt. Manage your finances properly. The information I shared today, of course, does not urge you to give up working with banks completely. It's just worth thinking about some aspects of managing your personal finance. For example, instead of making a deposit, maybe it's better to invest your money or invest it in a business. And instead of using your credit card, it's sometimes better to pay in cash so as not to become a victim of shadow tax. Don't let the system fool you, as it's the only.
Wow. Did you get all of that? That was amazing information. And thank you to the Money Channel on YouTube. We definitely always want to give credit to where we get our information, but it's very, very important. There was a couple of key points because as I was listening and, sometimes it bears, it's better for us to, really like listen to a video or listen to the information multiple times. It's just like a movie. You're going to get more and more information out of it the more you watch it. I saw, I think it was What's Love Got to Do with It, and I watched that movie over and over again, and then I started seeing like little bloopers. It was kind of fun, but every time I watched it, I got something different out of it. So couple of things that I want to just kind of emphasize that he talked about in that video. He talked about protecting their assets. That's what banks do. But again, best practices, protect our assets, right? We have to grow some in order to protect them. But, that's what we talk about on our channel about creating a diverse asset portfolio. So we're talking about protecting our assets. They talked about asset diversification, right? Diversifying your assets so that everything is not in one barrel. And I think the more you hear it, just like the movie, What's Love Got to Do with It, the more you hear it, the more that it becomes, oh, like, aha. Sometimes the light will come on and you're like, wait a minute, could that make sense now, right? That's not, it's not something that I should fear, right? So they say bonuses to push products on you. So understand that when they're, friendly behind the counter saying, hey, come on over here and, do you have a credit card? Do you have this? Do you have that? It's because they're getting bonuses to push those products on you. Service charges and fees unnoticed to you. That shadow tax. That was something I didn't know about, as far as, what a shadow tax is. But, they end up charging you, even though the initial fees comes from the merchant that's using the machines, but then the merchant increases their products or goods or services in order to accommodate that extra fee. So you actually ended up paying that service charge or that fee or that shadow tax. Okay, banks are businesses. Your portfolio is your business, right? And I don't think we look at it that way because we're just in, survival mode or just taking care of things day to day. But your portfolio is your business. Something that he said that was really, really important to me as well stuck out to me when he said invest versus deposit. Now, this is what I usually do for myself. And, some of the things that, I teach on is, when you make those deposits, of course, you're going to need them to transact your everyday business and everything. And that's fine. You need that. However, that's not a place for you to save. He talked about investing your money. And that's why, we talk about, we talk a lot about the trading accounts that we're, able to, refer to. We talk about an affiliate program. I don't know if you know, but some companies do have affiliate programs. We talk about money that's sitting around that we can actually benefit from and then be able to invest them. So one of the things is affiliate programs. So the Amazon, Audible, a couple of companies that we're affiliated with, they actually pay you for referring that business to them. So it's like I talk about when we refer. My daughter told me over and over again, I go to Amazon. Amazon has it. Amazon has it. Every time she gives out that, I got to go back and just see if she's not watching the show to tell her that. Every time you send somebody over to Amazon, if you use your link, you'll get paid for that. And that's just a way for you to take more money, add it to your portfolio, and then invest it for yourself. That's how you're able to create a system that works for you and that gives you back a systematic cash flow. So hope the information that we shared with you today was very, very important as we continue to go and grow. We're going to continue to drop more and more asset classes and give you more and more information on how to diversify your portfolio because it's all about us winning. And the only way for us to win is to give ourselves the grace to, continue to add on to our knowledge base. Give us the grace to sit back and really, really understand and study it. I'm always going to bring this up. Our books, our notebooks, make sure that you are creating that reference tool. I refer back to mine on a daily basis. Alrighty, until next time, don't forget to like, share, and subscribe. Share this information with somebody else. And don't forget to listen, learn, and leverage the information. Bye for now. Stay fearless.